So Nvidia has made a massive run in the last couple of years. This video I'm going to break down everything that you need to know on Nvidia stock leading into earnings, some good things about the stock, some bad things that could potentially crash the price. We're going to look at charts. I'm going to show you my account that's $800,000 with a potential trade I'm going to make on Nvidia. We're going to talk about how Nvidia is becoming the world's most important stock and the implications for what this means for the entire market. I'm going to go over earnings that happened in the past so that we could try to figure out what's going to happen in the future with the stock. And then I have a full-blown report from Schwab that we're going to comb through to go over all of Nvidia's financials, all the charts, how it does versus the S&P 500, all their earnings growth quarter over quarter, year over year. We're going to go through everything in this video. It's going to be very thorough. So Nvidia has been hands down one of the most popular stocks in the last couple years. I mean, it's made a meteoric run from about $11 in October of 2022 to over $128 right now. I mean, it's done over a 10x return since 2022. It's about 2 years. Now, what you're probably wondering is, was this move justified? Did the earnings go up enough to justify this move, or is the stock going to crash? Earnings are coming up, and this video is going to break down everything that you need to know to figure out maybe Nvidia is cheap or maybe Nvidia is expensive so that you could potentially make money off of a big trade on Nvidia. So CNBC dropped an article earlier today saying Nvidia has become the world's most important stock, which adds pressure to the upcoming earnings report. So Nvidia is about to report earnings on Wednesday after the bell. Typically after Nvidia reports earnings, the stock goes straight up, it does a big moon. But the problem with it is they report earnings right after the bell, maybe 5 minutes after the market closes. All the financial data comes out, shows you earnings, revenue, and all that good stuff. But the move in the stock price doesn't necessarily matter at that point. What matters is what they say on the earnings call, but that usually doesn't come to like 30 minutes to an hour later. So the most important thing that they talk about on an earnings call is the guidance. You know, when you get the quarterly results, that shows you what happened with the company for the previous 3 months, and it's usually like a month delayed. So that data is in the past. What most investors care about is they care about the future. They care about the guidance. They care about future products at Nvidia that are coming out, such as the Blackwell chip. Are they going to delay the Blackwell chip? Is there softness in the demand for their chips? Is the AI boom going to bust? Is it going to keep booming? What is the demand for this product? Is Nvidia going to keep growing at these crazy growth rates that they've been growing at in the past? All of this stuff is going to be under scrutiny, and this is going to have huge implications for other stocks in the triple Q, and even in general, the Mag 7 stocks, they have a lot of AI stuff going on, a lot of cloud computing, and Nvidia is one of the key players that has to do with that stuff. So I listened to the earnings call on AMD a few weeks ago, and the CEO was asked a question that kind of made me a little bit nervous about demand for AI chips. She said, "How is the demand for AI chips?" And she kind of just dodged the question straight up. I don't remember her exact response, but it was something along the lines of, demand is good. You know, we don't really want to comment on demand, but the demand, you know, if your demand is great, why wouldn't you just come out and say, our demand is popping, and tell them the truth? But if you're trying to dodge the question on demand, there could be a little bit of weakness right there, or maybe even slow down. So I'm not saying that Nvidia doesn't have the strong demand that it had in the past, but to grow at the growth rates that it's been growing at over the last couple years, it's not sustainable, and everyone knows that. But the question is, how much is that going to slow down? Is it going to slow down to 10% growth per year or to 50% growth per year? All eyes are going to be on that guidance because that's going to let us know what they're thinking for the demand going forward. So this right here is a chart of Nvidia, and it shows you when they reported earnings. So January of 2021 is when it starts, and then it goes to current. So you could see, you know, there's these little green up arrows right here. This is when Nvidia beat earnings, all these green ones here. So you could see the stock is trending up, but they beat earnings right here. But over in this time period, this was February of 2022, they had slightly weaker guidance. So that's when the stock started trending down, and then they started missing a few earnings reports right here. But then they started turning it around, and the demand for these chips started coming in like crazy, especially with like the AI boom that's been happening. So like March of 2023, it's been in a straight moonshot straight up. More common than not, I mean, out of all these earnings reports right here, they only missed earnings twice. You know, there's so many companies, for example, Tesla, who's building out this huge FSD cluster where it's going to have all these Nvidia chips, the H100s, the program FSD. So there's so much demand just for Tesla for these chips, but there's so many other companies beyond the spectrum, beyond Tesla, that want these chips. But the question is, once all these companies buy these chips, is there going to be demand to buy more chips? Is it like where you go buy an iPhone and the iPhone is good for maybe 3 or 4 years and then you're going to say, okay, it's time to upgrade? So all these companies that are buying these chips, you know, from 2023 till now, that's only like a 1.5 year spread. So all those chips that they have right now Are they going to say these chips are hitting the bottom line, our productivity is going way up, so we need to buy more? Or are they going to take like a wait and see approach and see what are these chips actually producing for our company, and is it worth it to invest more into this? I'm going to camp that Nvidia is definitely the top player when it comes to cloud computing and designing chips. So for the record, Nvidia does not make chips, they design chips. So their design is hands down the best. Everybody wants to get their hands on Nvidia chips, but once these companies get their businesses saturated with these chips, how much money are these chips and this AI stuff that these chips can power actually producing to the bottom line of these companies? If they could justify it and say, we're investing $100 million and it's giving us X to the bottom line, we're going to earn this money back that we paid for these chips in maybe 10 years, it's worth it to them. But if it's not playing out, the demand for the chips is going to go down. There's companies like Meta that's doing their own large language model. Elon Musk with X, he has Grok, same thing. ChatGPT, same thing. All those companies are trying to do similar stuff. And then there's so many other spin-offs of ChatGPT versions at other companies. So there's a lot of demand for these chips. The question is just, what is the demand, and is it going to slow down going into the future? So now we're going to go through this report that I get on Schwab. So anytime I look into a company, I hands down go through every single word on these pages. So this is on Nvidia. This was done 8/27 of 2024, so that was today, okay? So I like to look at the right-hand side. So PE for the last 4 quarters on Nvidia was 74. The forecasted PE going forward is 46. So what that's saying is, in order for the price earnings ratio to go down, earnings have to go up or the share price has to go down. So when they assume this, they assume the current share price and then they just factor in earnings going forward. So a price earnings ratio of 46 on a company that's growing as fast as Nvidia is honestly not too bad. You know, we could see the growth metrics right here. So 1 year sales growth was 208%, 3 year sales growth year over year was 54% per year. And then check out their earnings growth. So 1 year earnings growth was 788%. That's pretty much why the stock did a roughly 7 to 8x, because as you know in my other videos, the number one thing that moves a stock is the earnings. So if earnings go up by a factor of 7 to 8, the stock price is probably going to go up similar to that also. Now the 1 year forecasted earnings per share growth is 110%. So this is saying that earnings 1 year from now are going to be roughly double, which is a huge move. So there's a lot of movement in the stock that could happen to the upside. So if we don't meet these lofty expectations, there's a huge potential that the stock could crater, because there's so much hype built into these earnings that if they don't hit perfect on every single note, it will tank. And then I like to go down here and check out financial metrics. So gross margin on Nvidia, it's freaking nuts, but it's 75%. So if they make $100 revenue, $75 of that is gross profit. Now net profit is 53%, so that's money out the door that they put in their pocket, where they sell something for $100 and $53 on every $100 is straight in their pocket profit. The typical for most companies is like 10 to 15%. Nvidia's at 53%. It's absolutely bonkers. So this right here is just a chart showing Nvidia, and then the dotted line is a 200-day moving average. So you can see Nvidia's been trending above the 200-day moving average, but it's gonna be like that because when you have this crazy earnings growth of 788%, there's no way that the 200-day moving average is ever going to keep up with how fast the shares are going up, because the earnings growth is going up so much, so the share price is going to go up that much. And then a good little chart right here, it shows you how the S&P 500 did versus Nvidia. So Nvidia totally blew it out of the water. So now this is my favorite part to look at on every single company. So this is earnings per share, this whole section right here, and then this is revenue, this whole section right here. So let's focus on earnings right now, okay? So Nvidia's quarters are all messed up, but the earnings that come out on 8/28, they're reporting second quarter of 2025. It's stupid how they do it, it's confusing. It should technically be second quarter of 2024, but just know they're reporting Q2 of 2025 on 8/28. So I like to compare quarter over quarter. So Q2 of 2025 versus Q2 of 2024. Q2 of 24, they had 25 cents a share of earnings. Now they're expected to have 64 cents per share when they report earnings coming up. So that's roughly, you know, a 2 to 3x increase of earnings. So that's a huge growth rate there. It's nuts. And then if you look to the right, this shows you the annual earnings on the company. So they went pretty much, you know, they were bobbing and weaving around right here. And then we had the huge AI demand where it went from 17 cents per share to $1.19 per share. And then 2025 as a whole is expected to be $2.74. So it's expected to go way up. So that's great. Earnings go up. But what about revenue? Revenue is expected to go way up too. 24 revenue was 60 billion. 25 it's going to be 120 billion is what they're projecting. So revenue is roughly doubling. Now the question is, when is that revenue going to slow down? Because it's just a law of large numbers. You can't have revenue doubling every single year, year over year over year over year. I get it for the short term, that's possible, but for the long haul, that revenue growth doubling year over year over year is just not possible. The law of large numbers, it's just not possible to double every single year. So you guys know that I have a Discord account, and on the top section over here, I post breakdowns on companies, and I did a full-blown breakdown on Nvidia a couple days ago. So here's what I said. Long term, Nvidia, super bullish, but short term, like in the next 6 months, it's tough because if their earnings growth comes in slower or their guidance comes in a little bit lower, this stock is going to get punished, and probably other stocks in the triple Q and the high big tech flyer stocks, those are going to get punished too. So the forward PE right now on Nvidia is 50. So how am I calculating that? So I'm doing 64 cents times the next 4 quarters, and I divide it by share price. When you do that, it equals $60 a share. Then you're going to say, dude, you're only assuming 64 cents for the next 4 quarters total. You're assuming no growth. You're right. But just looking at 64 cents, no growth, P ratio is 50. High, a little bit, but it's not out of control. But remember, I like to have margin of safety built into my trades. So I said here, so from a valuation standpoint, it's a little overvalued in my opinion, but when you factor in future earnings growth, it's not too bad. Let me show you. So I said, the reporting quarters and years are dumb, as I already talked about, so they report on Q2 of 2025, the next one that's coming up. So Q2 of 2025, they're expected 64 cents. If we assume 15% earnings growth quarter over quarter, this is what their earnings per share is going to be every quarter going forward. So if you assume 15% quarter over quarter growth, you know, that's similar to what it's been in the past. That's a 60% annual earnings growth. It's possible right now, but it's not going to be sustainable forever. So I said, with that being said, we would do $129 share price is what it was when I wrote this article. We do that divided by $3.18, which if you add up all these right here, that equals $3.18. You get a P ratio forward of 40. So it's really not too horrible when you think about it. So then here's what I said. Overall, I think I'm going to say that it's a buy for the long term, but short term, it's a coin toss. The guidance is key. That is what will actually move the price of stock on the earnings day. Then I talked about, I said this earlier, AMD CEO is dodging a demand question when asked. I get that Nvidia is a better product versus AMD, but AMD is a good market feeler to know how Nvidia may actually do. AI is great, and I think it's the future, but short term it might be volatile. So what I plan on doing is, I'm hoping for a huge jump after earnings. That's when I'll make a big play, and that's also assuming that I like the earnings, the guidance, the earnings call, financial numbers, and all that stuff that gets released. So making a play on Nvidia right before earnings, I think, is gambling. I don't like to take risks. I like to make trades that have high likelihood of making money. So could we go buy calls on Nvidia, the day before earnings and then hope it pumps and we can make a ton of money? Of course, but it's a coin toss. And if we check out my portfolio, in 2 years I made $537,000. It's worth about $800K right now. I didn't make that ROI by YOLOing calls and shooting darts at a wall and hoping for the best. I did that making trades where we had a huge margin of safety, where I had like a 90% chance that I thought I was going to make money on this trade, because the whole point of trading is that you don't want to get wiped out. Because keep in mind, if you have a 50% drop, it takes a 100% return to get back to where you started. Now, when you're looking at this chart, these aren't drops where I lost money right here. All these dips right here, I sold stocks to go buy houses. I have rental properties. So I use these dips right here as down payments for houses. And then even over here, so this is my return in Schwab in 2023. So last year alone, I made a return of 75%. I get it was a good year and the NASDAQ went up 43%, but I made 75% ROI on my money. And a lot of you guys are going to hate and say, well, you made 75% because you sent a bunch of money to Schwab. That's wrong, and I'm going to show you right here. So net contributions in 2023, I actually pulled $24,000 off of my Schwab account during this time period, and I still made $240,000, and I started with $290,000. So that's how you get that 75% ROI. So if you want to learn how to trade stock options like I do, the way that actually makes money, not the way where you're YOLOing, checking the stock price 24/7 all day long, there's a video in the description below. I cover everything you need to know. And then check out my Discord, links in the description below. I show you all my live trades. The second I do a trade, I post it there. And if you made it this far, like, subscribe, and I'll see you guys later.